All right, guys, U.S. session just kicked off about an hour ago, and I am surveying right now this U.S. dollar. I wanted to show you guys real quick that this U.S. dollar is back down onto the structure where it was before that Turkish lira situation that happened a few weeks back. Okay, so guys, look, if you guys are new to the channel, folks, welcome. All right, make sure you guys are subscribed, and if you like the video for your boy. I appreciate it. Today I want to go over the US dollar, all right, and the potential strength we may see on that Euro USD. And I also want to discuss that CHF as well. Okay, so guys, comment down below with what you think this Euro can do, where you think the CHF will be as well. I'm interested in seeing kind of like a broad range of ideas. All right, look, let's pull over into the charts. Take a look right here at this dollar index, which you guys can notice here. I'll pull back out to a weekly. You guys can see that the dollar index, it was holding this range for a long time. I mean, June, July, and early August, we were stuck inside of this pretty intense consolidated area that on the monthly time frame, if I pull out, was really like one of the last areas where we saw the this currency back in Q4 2017, before that massive slide that persisted throughout Q1 and throughout Q2 for the US dollar. Remember, that was happening because the US dollar just really couldn't find its footing when it comes to inflation and retail sales, GDP, all the different economic data releases that we were looking at. Also, remember, this was also a time where the euro was getting considerably stronger because of their monetary policy shifts that were happening within the ECB. And then what put the nail in the coffin was Steven Mnuchin and Donald Trump mentioning how a weaker currency would do better for the exports in the United States. Well, since that has happened, you guys can see here that we've had, again, a pretty tremendous move back inside of that original structured area. So again, we were trading down here at the dollar, at the 88s on this dollar index, and now we pulled all the way up into the 96s. All right, so I mean, that's a pretty decent sized comeback. If I go from the high to the low here from a Fibonacci perspective, we're back within the 50% area of this overall swing. All right, so that's a place where I don't like so much because I hate being in the middle. I like being at extremes. And we knew we had a very good profit, very large profit potential down here in the 90s. But once we started moving back up and actually the trade started to persist, because we caught that move in the 90s. That was a pretty big trade that we're looking for. Here's a screenshot of, I guess, the thumbnail of that Sunday breakdown that we were talking about buying this market at that time. I'll put the link for that video down in the description below, but we caught that move up into structure, and then once markets consolidated, that's when we had to look for opportunity elsewhere because you can't make money in a consolidated market. So it's only been recent that we've seen some opportunity come in on this pair, and that was during that Turkish lira situation. But now that we're back down into structure and that Turkish lira event has somewhat evaporated out of markets or been priced out of markets, so to speak, that we need to look for new opportunity. And so yesterday we mentioned in the Sunday breakdown that it's likely that the Fed are going to raise rates. And so when you look at that data, it's kind of like, okay, well, if that's going to be priced in, or if that's already priced in, this market really doesn't have much more to go. Okay, so that's why I am seeing that there potentially could be some US dollar weakness over the next coming months or so. All right, I don't see the US dollar pushing back up into structure. Obviously it could, and the best place to technically be buying the dollar right now is back here at this structural low. All right, right around this price area here. Because if this area sustains, if markets sustain this price area, then yeah, you're just going to get a retest of that previous high. So that's something that I'm just keeping a look at. So here, let me pull over to the daily. Let me show you what this daily structure looks like and why it's somewhat enticing me to potentially be selling the dollar and buying that Euro U. You guys will notice here, let me pull out, let me clear the drawings real quick. You guys will notice that we are sitting right at a 23.6% Fibonacci level here on the index. It's not a bad place to start looking for some potential sell side momentum. 23.6 is a hard Fibonacci level to maintain, especially when the markets aren't so favorably buying dollar right now, right? So there isn't this rush to start buying the dollar, and that usually means that you can get deeper retracements. All right, boom, there we go. All right, so that being the case, we pull over here to the Euro USD. We should see that the Euro USD is around the same price area, right around that 23.6. We can see markets just broke out the 23.6. We're technically now in a new situation where we can see some type of profit potential. I think this Euro U can start to pull back up and start seeing the $1.17, start seeing those $1.18s potentially get back up into the $1.19s, which will be a 50% retracement on this overall market here. Okay, so this is somewhat my projection over the next 30 to 45 days, maybe 60 days. We can see markets back up into the $1.19s. It's just about playing it safe and trading in this market, you know, with some patience, right? I mean, it could. We don't know how long this could happen. Rates again are about to raise next month. I don't think that's going to add a considerable amount of strength to the US dollar because I think it's already priced in. That being said, anything that has even the slightest negative implications when it comes to the dollar, or even the slightest positive implications when it comes to the euro, will send this market back up to the $1.19. All right, so that's my assessment for the dollar. That's also my assessment for the euro. You can play that euro strength in a couple other pairs as well, obviously, but we'll be talking about that in our today's markets video, all the different euro cross opportunities that may be there. So if you guys want to get inside of the trading community, just click the link in the bio down below. Okay, so I want to talk to you guys also about this CHF. This is what the CHF is currently looking like. Notice where we're hanging, 23.6. All right, so I'm just keeping an eye out on this overall structure. Okay, obviously we have to notice this structure here. We may have an illiquidity gap, meaning that there may not be too many market participants. Once markets break outside this 98 area, there may not be too much market participations down until the 96s, which is a solid, you know, 200 some odd pips away. Okay, and if you look even further back, there's some larger structures that really exist down there in that 61.8. Okay, so this is what we're looking like on the weekly. Let me pull out to the monthly. Monthly's ugly, but this is what we're looking like on the monthly. Again, if you guys can see, 61.8 isn't a horrible area to start looking for markets to run down into. But again, bare minimum 96. All right, 96 will give us a decent amount of profit potential. So I think this is a weak leg that markets are currently standing on. That being said, we could potentially start to see markets pull back down in a structure. Again, it's important for us to define what that leg is. All right, so you have to know why markets accelerated up into that price area, and if the idea in that in the current asset here, which is the CHF, is going to persist. All right, then yeah, you will have a stable structure. But if the reasons why this market traded up into that high are invalidated, we will see markets pull back, and they could easily get back down to that 50 and that 61.8. All right, so let me pull over. I want to show you guys the exotics really quickly, just to show you maybe some cross-currency correlations with the CHF as it stands at the moment. So remember, we just had a CHF a trade I did that would mean that the CHF is getting a little bit weaker, right? Well, that means that our Euro CHF play to the upside isn't so much of a bad idea, okay? And so again, markets are somewhat at an extreme. They have yet to recover up into that 38.2, even, you know, definitely not the 50. Let's see where we are from the high to the low. Right around the 23.6. Again, it's another situation where, hey, there is profit potential up into the previous structure. So there we go. Euro strength, CHF weakness. It might be something that's playing out. We've seen it happening over the span of over the past 3 weeks. Will it happen this week? I'm not too sure. There's not too many catalysts coming out that are large enough that I think could sway markets. But near the ending of the week, there are some Euro CPI numbers, German retail sales, and I think there are some Swiss numbers as well. And we'll talk about that when they come up. Okay, so that's our Euro CHF. Real quick, here's our Aussie CHF. Aussie has been hammered lately because of China, and we know that the Shanghai index has been hammered considerably as well. Shanghai index is like the stock market index for all of China, and it's been hit really, really hard. Here's a quick screenshot of that. And so obviously Australia, its business model relies on China. Everything Australia does, they just ship it right over to China. It's very effective for them. And so that gives them the ability to have a robust economy and have a large purchaser of their products and their services, which has really been what the Australian dollar has been, you know, relying on. So you guys can see that in the year of 2018, the Australian dollar has been getting weaker and weaker, even relative to the CHF, let alone the USD. Here, real quick, just show you guys Aussie USD. You guys can see massive sell side, 81 down to 73. Again, that's all Aussie weakness. A little bit of US strength as well. Okay, so Aussie CHF looks decent. I'm not really playing this one too much as I would play probably that Euro CHF. Now pound CHF is a little scary trying to buy this bad boy because we know the pound is not done so well, as you guys can see. Down from 139 at the high okay, and we're now at the 126. All right, so literally that's a 2,000 point move in just 1 year alone. All right, pretty massive. So I want to keep an eye on the pound CHF. If I want to play something CHF wise, I'll play that here on the Euro CHF, or I'll play that over there on the USD CHF as well. Okay, and so I want to go a little bit more in depth with these pairs. I'm going to be spitting out some more information throughout the week, but those are the ones that I really see lining up. I did talk about this Euro AUD as well. I'm keeping my eye on it just because this structure is absolutely intense at the moment. But the only thing is, if I wanted to sell this bad boy off, I'd be going against my trade ideas for that Euro play and that Euro USD play. So I'm keeping an eye out on the structure here. If anything happens in the Euro, this will probably be the first place where I'll start to short the Euro, just because the structure is the best for an entry reason. Okay, so guys, look, I'm going to go in more depth inside of the community. If you guys want to get access to that, just click the link in the bio. We'll see what happens in regards to this Euro USD. Again, I'd like to see it back up in the structure. USD CHF, like to see it sell side. Euro CHF, like to see it back up in the structure as well. I think those markets are at short-term extremes. That's good for us over the next 2 weeks or so. Okay, guys, if you need anything, let me know. Tomorrow, we have day trading versus swing trading. It's going to be fun. Okay, let's see what we got. Talk to you guys soon.